It does look like it should not be more than that, since the GNPA has risen only by 5,000 crore. It is unlikely slippages would be more than 8,000 crore. Do stay on for a minute, Rajiv. Siddharth Purohit of Angel Broking is also with us. Siddharth, your thoughts on the numbers? 110 basis point increase in the gross NPLs.
See, the rise in NPA was well taken. In fact, I was expecting slippages to be something similar during this quarter also. So I don't have the slippages number as of now, but I think looking at the rise in gross NPA, it seems slippages would have been something similar to what we saw in Q2 itself. But if you just look at the broader numbers, possibly NI has been little better than what I expected, and maybe, our bottom line also has been little better than what I initially thought about. So, but yeah.
So you're not selling the stock on these numbers, Siddharth?
No. In fact, even if there is a slippages of 7 to 8,000 crore, which is already factored in, I think the bank has already kind of started cleaning up the book, and we already know that there was a outstanding watch list of almost 32,000 crore. So those all has to be kind of part of that has to be flowed into NPA.
Okay.
So even if there is accelerated recognizing of NPA from those set of accounts, then I don't think market is going to take it in a very negative way.
Okay, fair enough.
Now, so what will probably be key is that to see that what would be the slippages from the non-watch list.
Yes, exactly my point, which I actually wanted to ask Rajiv. Rajiv, that was the key point which really got Axis Bank's numbers this quarter as well. And last quarter, it was a little bit of a disappointment for ICICI Bank in terms of the slippages, X of Watchlist and the non-stressed book, which was at around 1,600 crores. How crucial is that number for you? And what is your expectation?
So yes, that trend is quite important because even for ICICI Bank over the last 2 quarters, the non-watch list slippages have been ranging between 15 to 18 billion. So that's quite a big number given the fact that you've already given out a watch list from where you're expecting a lot of stress to come through. So this has been a negative surprise in the numbers in the last 2 quarters. If that comes across in this quarter as well, then or if any increase in run rate from that particular pool of assets will obviously be a negative, will attract a negative reaction. But I think from a stock price perspective, I think if the overall slippage number is not going below kind of 80 billion number, and then this seems to be kind of manageable, because if you look at the current estimates of the analyst, from ICICI Bank in terms of how the numbers are expected to pan out in the second half of the current year, as well as they're expecting only a moderate improvement in the credit cycle for ICICI Bank in the next year, a lot of it seems to be priced at the current valuations at about 1.3, 1.4 times, price to adjusted book on FY18 basis. This is after obviously taking out the valuations of subsidiaries. So, expecting a big incremental negative, movement from ICICI Bank over the next couple of days to even a small negative surprise will not be rational.
Okay. Well, would you not worry about growth itself? Advances at 4.57 lakh crore indicates the loan has grown by only 3,000 crore in 90 days of what is a busy season credit policy. I agree, those were demonetization days, but that's all that loan has grown from. 4.54 lakh crore has become 4.57 lakh crore, and deposits were at 4.49 lakh crore, and they have grown almost 16 lakh crore to 4.65. So there's almost a 15,000 crore growth in deposits and a 5,000 crore book loan growth. That obviously is a mismatch for the bank, and they will have to grow very fast to deploy their deposits profitably. On that point, Siddharth, what would you watch out in the management commentary for optimism, and what might disturb you?
Asset quality, obviously, that is a key to monitor other than the watch list. But on top of that, as you were talking about the growth, I think the bank has mentioned in the press release that possibly there was a maturity of almost 870 million from the FCNR related loans. So maybe redemption of that could have also impacted the loan growth. So
crore has gone out because of that.
So maybe possibly on a like-to-like basis, if you compare then the growth the loan growth should have looked, much better. And what I sense that possibly now that rates has come down, possibly from Q4 onwards, you might see some amount of uptick in the possibly loan growth in the quarter.
Fair point. Thank you, Siddharth. Rajiv, last words from you. Anything, if the non-stress list or non-watch list loans were more than 30%, I think they've maintained a run rate of non-watch list GNPAs at about 28-29%. If it were more than that, will that disturb you?
Yeah, I think, as I said before, that, if that run rate goes up in this quarter, it will be a slight negative. But I think one important aspect of the commentary would also be how they expect the resolutions in the watch list accounts to take shape going ahead, because last quarter I think they had given us some hope that they were expecting slightly fast resolutions to come across from the exposures where the corporates have already announced some of the deleveraging transactions. So if that pace has really picked up and some resolutions are likely to come through and kind of reduce the watch list, so that could be a positive from the comments perspective.
Okay, thank you very much, Rajiv and Siddharth, for joining us with your comments. Both of them not really shocked by that 5,000 crore rise in gross NPLs. Will wait closely for the slippage number, which even at 7,000 crore will not be too much of a shock to the system. Management commentary on resolution of NPAs will be crucial. But over there, I would think that bankers are now more inclined to throw their hands up in the air after the recent arrests at IDBI. With that, we wrap up this edition of Closing Bell.